called H4 time frame, and this is very dangerous price action because first it goes up in 5 impulsive wave, then make top with ending diagonal, then came back to 1690. On left there was bullish trend because it was making higher high, higher low. On right now it is a bearish trend because it is making lower low, lower high. It came down in wave W with aggressive price action, impulsive wave, then made 50% retracement wave X before Jackson Hole meeting. And these were macro traders who knew that Fed will be aggressive about rate hike in Jackson Hole meeting. But after confirmation, it break and make a new low. And this wave V retracement was very confusing. First, it made 50% retracement at 1742. But after few hours, confirmation came from Kaskari and he said he want stocks to go down. And after him 2 days everything came down. There was no technical, no price action, just selling the news. And that is the reason behind our Telegram channel, because we got that news early and we able to trade before it break out last support 1740. And when you verify fib ratio for this wave count, then wave Y has made 100% projection at 1690 with a hammer on H4 time frame. This hammer came before NFP as mentioned in Jackson Hole meeting that there will be pain in economy for path to 2% inflation target, and this pain is visible in lower NFP numbers. This is first reversal which I am talking for more than 1 month. First it came in CPI and second time it is coming on NFP. Right now it is again testing this 1714 resistance after breakout. On this H4 time frame you can see this is a strong resistance level and it is making this parallel lines pattern. So if wave Y has been completed with extension in ABC format with 100% projection, then correction has been started or a trend reversal. But for a bullish trend reversal we have to wait until price goes back up to 1765, because if goes back to 1800 after a big drop in CPI number, then that will confirm a double bottom on this H4 time frame. But for bulls you have to wait at least price going back to 1765, which was the high before Jackson Hole meeting. So if you have missed that entry and this selling entry at the top, then bulls have to wait for breakout of this 1714 resistance, then they can join after retracement, because next trade is depend on CPI numbers, and if new low comes then it will break 1690. Since this H4 time frame does not give us clear picture where price can go if 1690 level breaks or 1800 level breaks again, but daily time frame give us a better picture compared to H4. First, 1676 is our super strong resistance level for seller on daily time frame. Last year it made a double bottom. It tried here but failed, and it is trying again because these two daily candle are making a strong resistance at 1696 level, When first time price went up, all of these resistance were important, and all you have to do just buy the breakout retest of this resistance level, then targeting upper resistance. And if bullish trend comes again on CPI, then all of these resistance are not important like last time. The only resistance for these bulls is this 1805 resistance level. This is their target, and this will be double bottom trade. And if daily candle close below 1696, then next week support is 1676, and all of the seller will have to wait for clear breakout of that level. If that break, then we will sell retest and target up to 1500, which is our weekly target for seller. This week on Monday we have Labor Day holiday in USA. Basically, economic superpower will be on holiday, so do not expect a big price action. But news start from September 7, Wednesday, the Fed Chair Powell speech. And if you remember his last two speech, first one on FOMC, he used the word neutral, and gold went from 1680 to 1805. Then on Jackson Hole he used the word pain, and gold is now back to 1690. So what Fed say in this speech, his tone for monetary policy, dovish or hawkish, will decide gold price action. Because last time he talked about pain and it is visible in NFP number. Then on September 8 we have ECB monetary policy. Last week their inflation hit 9.1%, and now investors are speculating for 75 basis point rate hike. These 2 week central bank hike 75 basis point at the same time. Then what will happen to this globalization, which is addicted to 0% interest rate since the beginning, and it was started with 10% inflation in UK. So this central bank rate hike is killing gold price, and this bottom was also made on ECB meeting when they first hiked. So what this ECB member decide for their next monetary policy, and this Fed Chair Powell speech will decide this gold trend. Either we will get double bottom and gold price back to 1800, or gold will break below 1676, because this Russia Europe energy crisis cannot be solved by central banking monetary policy. And all of this big investor knew German hyperinflation 100 years ago. On last meeting, ECB announced their money printing policy, and gold made bottom immediately. So all of this depend what these 2 week central bankers do this week. And if we go to weekly time frame, then you can see these 3 weekly candle are making a strong rejection below 1707. If this week or upcoming weekly candle close below that level, then next downside risk for 1500 will be real. But first, a 1 weekly candle need to clearly fill this gap from 1707 to 1676. So we will get confirmation either this week or next week, because CPI on September 13, if this drops again, then market speculation was 70% before NFP, and now it is 57%. and if CPI drops too, then all of these will bet for 50 basis point, and this will be beginning from QT to QE. And now their banks are saying that no soft landing, but they are still not using that magical word stagflation. On first day of the month, Ray Dalio again remind us about stagflation, and he has given warning for next 18 months. And if we focus on monthly time frame, this was the last time when recession came. They printed loads of money, but gold collapsed later because there was no inflation, and they started QT. But this time they have inflation, and if they try to avoid recession, then they have only one strategy, QE, and which is now proven that it brings inflation. Last time globalization saved them, but this time Russia, China, India, these countries are not slave of USA anymore. Now they are dumping dollar, buying gold. If we take this buyer out of the market, then gold could have tested this 1367 support level. And this monthly candle, everything will be clear. Either gold will break this 1680 level, and major support is 1367. So you will have to manage the risk based on this support, or this is ABC flat correction and a new bullish trend driven by stagflation is coming. But confirmation will come this month. This week we have two central bank news, then CPI next week, and Fed FOMC in the end of the month. Since retail trader do not trade on monthly, this time frame is for billionaire, and retail trader trade on H1 time frame. So this time frame we have these parallel lines, and price action is testing both upper and lower trend line two times, and it is making lower low, lower high, a clear bearish trend, a complete opposite to last time. So this trend line is your dynamic resistance, and this 1734 to 1730 is your static resistance zone. A price break out this zone and goes above that level, then you can buy retracement, retest, but until this level breaks, it is bearish, because it can make correction in this zone as a chart pattern or zigzag, then keep making new lower low, and our a strong support is 1680. So first bullish confirmation is price going above 1734, and a clear confirmation on breakout of the 1765 level.